Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It is Tuesday morning, September 3, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Hope you all had a good long weekend. Yesterday being a holiday for the markets on the occasion of Labor Day. Let's roll. For all the intervening volatility, stocks rallied Friday to finish the month not far from where they had started. Friday's moves came after the release of broadly positive economic data. According to the Commerce Department, personal spending rose 0.5% in July from the previous month, up from 0.3% in June. Personal income exceeded expectations, while the Fed's preferred inflation gauge held steady at 2.5% on an annual basis. Major US stock indexes closed the books on a tumultuous August, with monthly gains riding a string of encouraging economic data to overcome concerns about the health of the labor market. The S&P 500 climbed 2.3% from the end of July, leaving it just shy of its record close. It closed Friday on 5,648 points. The tech-heavy Nasdaq Composite ticked up 0.6% to end August on 17,714 points. The Dow Jones Industrial Average rose 1.8% for the month to close Friday on 41,563. The Dow Jones scored a second consecutive all-time closing high on Friday. All 11 S&P 500 sector indexes rose, led by consumer discretionary up 1.9%, followed by a 1.1% gain in industrials. Weekly unemployment claims also remained steady, a sign that while a cooling labor market might be leading to a hiring slowdown, it is still not causing any big increase in layoffs. US consumer spending increased solidly in July, suggesting the economy remains strong while prices rose moderately. Markets remain in a delicate balance, investors and analysts caution. Despite encouraging signs in recent weeks, the labor market remains a source of anxiety, putting a huge amount of weight on August jobs report, which will be released on September 6th. While Federal Reserve Chair Jerome Powell has strongly signaled that the central bank plans to cut interest rates at its next meeting on September 17 and 18, other officials have sent conflicting messages about how rapidly they want to cut rates beyond that point. For now, the economy is in a Goldilocks stage. A just right Goldilocks economy has steady growth, but not too much that it fuels in excessive inflation. One that prevents a recession, but not so much growth that inflation rises by too much. Among individual stocks, Dell Technologies rose 4.3% after the computer maker posted higher revenue and profit on surging demand for artificial intelligence oriented sectors. Marvel Technology beat second quarter profit and revenue estimates as its shares surged 9% after the chip maker forecast quarterly results above estimates. Ulta Beauty shares fell 4% after the cosmetic seller retailer cut its full year outlook, citing slowing demand for higher priced cosmetics and fragrances at its stores. Amazon.com and Tesla each jumped over 3%. Broadcom rallied nearly 4%, while Nvidia rose 1.5%, rebounding from a 6.4% drop on Thursday after the artificial intelligence chip bellwether failed to match sky-high investor expectations despite upbeat results and a broadly inline forecast. Novavax surged 8.6% after the US Food and Drug Administration granted emergency use authorization for an updated version of its COVID shot. Intel jumped almost 10% following a report it was exploring options that could include a merger. Shares of Trump Media and Technology Group, majority owned by former US President Donald Trump, dipped 1.7% to a record low, leaving its stock's value at $3.9 billion. Brent crude, the international benchmark, is $77.52 a barrel. Gold is at $2,500 per ounce. The yield on the benchmark 10-year US Treasury note has settled at 3.910%. That was up from 3.866% Thursday, though still down from 4.107% at the end of July. Hope you have a great day. See you in tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for the market. Happy investing, stay inspired, and remember it is all about money.